Most people believe that building massive wealth requires a grand gesture. They think you have to quit your job, risk your life savings on a startup, or announce your hustle to the world. They believe freedom is something that happens after the burnout. But they are wrong. There is a quieter, smarter, and far more lethal path to financial independence. It is called the shadow portfolio technique. It is the art of building a life-changing fortune in the dark while staying fully employed without anyone at your office ever suspecting that you are becoming a millionaire behind the scenes. This is the strategy of the invisible rich. A shadow portfolio is not just an investment account, it is a private wealth system built parallel to your primary career. While your job pays for your rent, your groceries, and your lifestyle, your shadow portfolio is busy buying your freedom. It exists in the background, compounding silently while you attend meetings, answer emails, and live your normal life. The power of the shadow lies in its privacy. No one at work needs to know your net worth. No one needs to see your strategy. Because there is no public pressure, there is no ego involved. And when ego is removed, rational decision-making takes over. The biggest mistake amateur investors make is quitting their job too early to focus on investing. This creates immense psychological pressure. When your survival depends on your portfolio's daily performance, you become an emotional investor. You panic sell when the market dips. You chase moonshots because you're desperate for a win. The shadow portfolio technique turns this on its head. Your job is not your trap. It is your venture capitalist. Your salary is the steady, reliable fuel that funds your machine. Because your survival is guaranteed by your paycheck, you can afford to be the most patient person in the market. In the world of wealth, the person who doesn't need the money today is the person who wins the money tomorrow. To master this technique, you must understand the fundamental difference between active income and passive wealth. Your job income is active. It is traded for your time. Your shadow portfolio is passive. It is traded for your discipline. You must never confuse the two. Most people use their raises to upgrade their cars or their apartments. They are essentially trading their future freedom for present status. A shadow portfolio investor does the opposite. They treat their job income as a tool to acquire assets that produce leverage. You are an employee by day, but an asset owner by night. Every shadow portfolio starts with a leakage strategy. Every single month, without exception, a fixed portion of your net income is redirected into your shadow system. We recommend starting with 10%. If you can push that to 20%, you have reached the acceleration zone. This money is no longer your money. It belongs to the shadow. It is off limits for vacations, gadgets, or emergency repairs. By automating this transfer, you remove the need for motivation. Motivation is fickle. Systems are permanent. Where does the money go? The shadow portfolio focuses on scalable, boring assets. We are not looking for the next crypto gem. We are looking for total market index funds to capture the growth of the global economy. Dividend-producing assets to create a cash flow engine that will eventually replace your salary. Long-term growth equities to ensure your purchasing power beats inflation over decades. The goal is to build a self-healing portfolio, one that is so diversified across industries and geographies that no single market crash can destroy it. To truly accelerate this, you need to implement a shadow budget. This means you live your life based on your previous salary, not your current one. If you get a promotion that pays an extra $1,000 a month, your lifestyle doesn't change by a single penny. That $1,000 is shadow capital. Most people suffer from lifestyle creep. The more they earn, the more they spend. The shadow portfolio investor is a ghost in the consumer world. You drive the same car, live in the same house, but your brokerage account is expanding at double the speed of your peers. You are effectively living below your means, while your means are actually skyrocketing. The first 5 years of a shadow portfolio are deceptively boring. You are contributing thousands of dollars, but the needle barely moves. This is where 90% of people quit. They look at their balance and think, I could have bought a Tesla with this money. But you must understand the law of compounding. Compounding is backloaded. It looks like nothing for a long time, and then it looks like everything all at once. In the growth phase, you are not looking for income, you are looking for capital expansion. Every dividend is reinvested, every capital gain is left untouched. You are building the snowball. There is a massive psychological edge in being the stealth wealth investor. When you don't talk about your money, you don't have to defend your choices. You don't have friends asking for loans or family members giving you unsolicited advice. Silence allows you to stay focused on the math. Your success is a private scoreboard. While your colleagues are competing for the best car in the parking lot, you are competing for the most hours of freedom in your bank account. Eventually, usually between year 7 and year 12, the shadow portfolio begins to wake up. The income produced by your dividends and interest starts to cover your basic bills. First, it covers your phone bill, then your groceries, then your rent. This is the income transition phase. Even though the portfolio is now producing real cash, you continue to reinvest it. This creates a double compounding effect that accelerates your progress exponentially. As an employed investor, you should pray for market crashes. For the person who is already retired, a crash is a nightmare. For the shadow portfolio investor, a crash is a 30% off sale on their future. Because you have a stable job, you don't need to sell your assets to buy bread. Instead, your monthly contributions buy more shares at cheaper prices. During a recession, the world panics, but the shadow investor thrives. You aren't watching the news for hope, you are watching the ticker symbols for discounts. While others are losing their sleep, you are aggressively acquiring the future earnings of the world's best companies at a fraction of their value. Many people ask, when do I stop? The answer is when your shadow portfolio produces 2 times your annual expenses in passive income. This is the point of no return. At this stage, you are no longer an employee, you are a volunteer. You can choose to stay at your job because you enjoy the social aspect or the challenge, or you can walk away. The beauty of the shadow portfolio is that you never have to announce your retirement. You simply transition. You might take a lower-paying job that you actually love, or spend more time with your family. The world sees no change in your status, but your internal reality is one of total, unshakable freedom. Freedom is not the absence of work, it is the presence of choice. The shadow portfolio buys you optionality. One day, you will walk into your office and realize that you don't have to be there. You are no longer afraid of being fired because you are already self-insured. Let's be honest about the timeline. 5 years. You have momentum. You have a cushion that most of your peers lack. 10 years. You have independence. You could survive for years without a paycheck. 15 years. You have absolute freedom. Your shadow portfolio is now the main portfolio, and your job is officially a hobby. Beyond the money, the shadow portfolio technique builds a specific kind of character. It teaches you to derive satisfaction from internal growth rather than external validation. In a world obsessed with flexing and showing off, the ghost investor finds peace in the quiet accumulation of power. You aren't building this for the applause, you're building it for the safety of your family and the autonomy of your time. This mindset shift is the ultimate wealth. When you stop needing the world to see you as successful, you finally become free to actually be successful. The shadow portfolio technique works because it removes the ego. It works because it uses the stability of your 9-to-5 to fund the volatility of the stock market. You do not need anyone's permission to be wealthy. You do not need to announce your plans to the world. In fact, it is better if you don't. Build in silence, invest with discipline, protect your income, and let time do the heavy lifting. One day, you will step out of the shadow, and the world will wonder how you did it so quickly. But you'll know it wasn't quick, it was a system. If you're ready to start your own shadow portfolio and build wealth behind the scenes, hit the like button and subscribe. This channel is dedicated to the invisible rich, those who value freedom over status. Drop a comment below with the word shadow if you're committing to the 10% rule starting this month. I'll be checking the comments to answer your questions on how to automate your specific setup. Stop chasing the grand gesture and start building your shadow. Your future self is waiting in the dark.